Medical billing, it's one of those things that affects pretty much all of us, but often feels like a complete black box, right? Today, we're going to pull back the curtain and demystify it. We're going to follow the financial journey of a typical patient visit, from the moment you pick up the phone to the second your insurance company gets the bill.
So think about it. You go to the doctor, you hand over your insurance card, and then, weeks later, an explanation of benefits or a bill shows up. But what actually happens in that gap? What's this hidden process that turns a simple checkup into a complex flow of codes, claims, and payments? Well, that's the journey we're about to map out. We've broken this whole journey down into 4 main parts. We'll start with what has to happen before you even walk into the exam room. Then we'll decode that insurance card. After that, we'll dive into how the actual bill gets created. And finally, we'll track its path to the insurance company. Let's get into it. All right, part 1. You might think the billing process starts after you see the doctor, but nope. It actually kicks off the moment you make that appointment. This first step, just gathering your information, is the foundation for the entire process. If you get this wrong, you're pretty much guaranteed to have problems later on. You know that clipboard of paperwork they always hand you at the front desk? Yeah, that's patient registration. It might seem like a hassle, but what you're really doing is creating your financial identity within that clinic's system. This is what connects who you are to your insurance coverage, so they know exactly who to treat and, you guessed it, who to bill. The most basic, but also the most critical part of that registration is your demographics. We're talking name, date of birth, address, the simple stuff. But, and this is a big but, a tiny typo in your name or an old address can cause huge delays and even claim rejections. Getting this right is absolutely essential. Okay, here's a key term you might not be familiar with: the guarantor. It's really simple. This is just the person who's financially on the hook for the bill. So if you're an adult seeing the doctor for yourself, you're both the patient and the guarantor. But if you're taking your child for a checkup, your child is the patient, but you are the guarantor. It all boils down to whose name goes on the bill. And that leads perfectly into our next 2 terms: subscriber and dependent. The subscriber is the main person who holds the insurance plan, maybe through their job. A dependent is someone covered under that plan, like a spouse or a child. So very often, the subscriber is also the guarantor for their dependents. See how it all connects? And finally, all this information, your demographics, your insurance, who the guarantor is, it all gets tied to one unique number, your MRN, or medical record number. Just think of it as your personal account number for that specific hospital or clinic. It makes sure every single thing that happens to you there is filed correctly under your name and nobody else's. Okay, so now the clinic knows who you are. The next huge piece of this puzzle is, of course, your insurance. And to figure that out, we need to take a closer look at that little plastic card you probably have in your wallet right now. That insurance card is basically a data key. The payer, well, that's just a fancy word for your insurance company. Your member ID or policy number is your unique account number with them. The group number usually links your plan to your employer. And that payer ID is super important. It's like the digital mailing address the clinic uses to send the bill electronically to the right place. Now, here's something that happens behind the scenes, usually before you even show up for your appointment. It's called eligibility verification. The clinic uses the info on your card to do a quick digital handshake with your insurer. They're just confirming 2 things. 1, that your policy is actually active, and 2, that the service you're coming in for is generally covered. It's a really important checkpoint. That eligibility check also confirms something that is critical for your wallet: whether the doctor is in-network or out-of-network. In-network means your doctor has a contract with your insurance company to charge pre-negotiated rates. Out-of-network means they don't. And trust me, sticking with an in-network provider is almost always going to save you a lot of money. All right, so let's recap. The patient has been checked in, their insurance is verified, and they've just seen the doctor. Now the behind-the-scenes work really kicks into high gear. This is where the actual visit gets translated into a bill. You know, this entire process we're talking about, from the very first phone call all the way to the final payment, it has a name. It's called Revenue Cycle Management, or RCM for short. You can think of it as the complete financial assembly line for every single patient visit. So the heart of this RCM process really boils down to these 4 steps. It starts with capturing what was done, then translating it into a universal language, then building the official bill, and finally sending it out the door. Let's break each one down. First up is charge capture. The second you leave that exam room, a process starts to document everything that happened. We're talking the doctor's time, any lab tests, even supplies like a bandage or a throat swab.
Every single thing that can be billed for gets captured and put on a list. Next, that list of services gets handed off to a medical coder. Now, their job is basically to be a translator. They take the doctor's notes, things like patient has a sore throat or ran a flu test, and convert them into standardized numeric codes that every insurance company in the country understands. It's a crucial communication step. So, once everything is translated into those codes, they're all compiled onto a standard digital form. And that form is called the claim. The act of claim submission is exactly what it sounds like. It's the moment the clinic hits send and electronically delivers that bill to your insurance company, officially asking for payment. And just like that, the claim is out the door. So what happens when it actually lands at the insurance company? This is the moment of truth, where we get the payer's very first response. Okay, as soon as that claim arrives, it faces one of three immediate fates. Acceptance is what you want. It's the green light. The claim is in the system and is being reviewed for payment. Rejection is a quick stop sign. It's like a return to sender because of a typo or formatting error. It has to be fixed before it can even be processed. But denial, that's the one you dread. That means they reviewed the claim and are actively saying, nope, we're not paying.
Now, let's say the claim gets accepted and paid. Hooray! The provider gets the money along with a breakdown of what was covered. Payment posting is just the accounting step where they update their books. They record the payment from the insurer, which lowers the total balance and shows exactly what, if anything, is left for the patient to pay.
And this whole thing really comes down to one simple goal. The entire purpose of all that front-end work, the careful registration, the eligibility check, the precise coding, is to create what's called a clean claim. That's the holy grail, a perfect claim that sails right through the system and gets paid fast. The opposite is a dirty claim, which is full of errors and is where all the headaches and delays begin. So there you have it. We've just mapped the ideal journey, the path of a perfect, clean claim. But let's be honest, what about the journey most of us are more familiar with? The one where things don't go so smoothly? What happens when that denial letter shows up and the insurance company just says, no? Well, that's a whole other story, and it's exactly what we'll explore next time.